Welcome back to the Traders Network. I'm Michael Yorba, your host. Thanks for joining us. We're streaming to you live on yorbamedia.com and broadcasting to you from the Dallas KFXR 1190 AM Clear Channel Studios. All right, my pleasure. Nick Santiago, CEO and President, InTheMoneyStocks.com. Nick, how you been doing?
Great, Michael. Great to be back. Thank you for having me once again.
My pleasure. How'd the room go this morning?
We had another great day in the trading room. I mean, traders that are not there are missing out, but it was dynamite. It was fireworks, and we knocked off about a half dozen winning trades.
Wonderful. That's you gotta love starting a day off like that, man.
And that's all in the first 2 hours.
Yeah, that makes lunch so much more enjoyable. You don't have
go to lunch, and you have a nice steak, and you could sit back and really enjoy it.
All right, you want to start off with what was it, Yum Brands?
Yeah, I wanted to start off with Yum Brands today because I'm seeing a theme going on in this restaurant sector, and Yum is one of the leading stocks because it's not only important here in the United States, and it's important in China as well. And you can see this stock has been really starting to roll over ever since the 11th of March, and right now it's trading at $73.23, but I think it's going to drop down to around the $69 to $70 level. So traders, watch this one over the next couple of days. If you get a sideways pattern, you probably could short this. But either way, it's headed down to that $69 to $70 area before it finds any support.
Okay. All right. And Chipotle, definitely. I think this is a Texas company. Chipotle, they're all over the place here.
Yeah, CMG is the ticker symbol of Chipotle Mexican Grill. It's very, very popular. It's like healthy Mexican-type food, but long story short, it's been one of the best. Look at the chart on this thing. It's been one of the biggest winners I can remember in a long, long time.
Yep. But
recently, the stock just topped out about 5 days ago at around $623 a share. It's now trading at $558, so you can see what kind of rollover it's had. This should trade down to around $541. Traders at around the $540 level can look for a short-term bounce. But ultimately, if that level is breached with any kind of volume on a closing basis, this stock can fall all the way down to $450. So this is one that's going to be on my radar going forward. And right now, I think we'll look for some kind, whatever pattern it makes, it should give us some kind of a bounce at around $540. But depending on the pattern there, we'll be looking at this potentially on the short side afterwards.
Okay, SBUX is the next one.
Yeah, that's good old Starbucks, just continuing with this restaurant theme. And we've seen some money come out of this stock recently as well. Starbucks put in a big high late last year, and it has come down. And then recently it put in a lower high right around March 21st. And right now I've calculated Starbucks to go down to around $68. So right now the stock's trading at $73.38. So all of these restaurant stocks, they all have further downside to go, and that's just, adding a little bit more credence to my theme that the stock market is very, very vulnerable and should see further downside in the near term. But when you see a stock like Starbucks, there's a lot of discretionary income that's used to buy a $5 coffee. So I'm expecting this one to trade lower.
Got it. I see that it just blew through its 50-period moving average, rallied right up to it, and then is pulling off of it. I get it. Not looking good.
Mm-hmm.
All right. IBM?
Now, IBM is a stock that had some news a couple of days ago. The stock made a really good surge above around the 195 level. I think it's a blow-off top here, so I would be very, very careful with IBM. This stock should go down and test the 178 level. It's trading right now at 190.40. And then ultimately, I think IBM, before it's all said and done in 2014, will probably go down and trade down to around the 160, 158 level.
Oh, whoa. That's a big move, man.
That's right. That's coming.
Okay, so with that in mind, let me, before we get to VLO, would you see this as a preemptive move to a very big Nasdaq fall off?
Yeah, I mean,
that's a big move that you just talked about.
Yeah, I mean that's just technology in general. Technology's been the biggest winner in 2013. Sometimes the biggest winners become the biggest losers in 2014. So I definitely think it's signaling to us that tech sector is very, very vulnerable this year.
Yeah, well, it's pretty obvious right now because the Dow and the S&P are holding up in this pullback, but the Russell and the Nasdaq are not. They're leading the charge.
And those are the two indexes that where the risk money goes, right? People go into Russell 2000 stocks because they're looking for growth. They don't want dividends. They're not looking for income. Mm-hmm. They're looking for growth. And they're going to Nasdaq stocks because they're looking for growth. They're not looking for income. They're not looking for a dividend. They want to see appreciation. And when those two sectors roll over, that's telling you the institutional money is taking money off the table. They're getting out of the risk assets.
Here's a question I've got for you. So let's say that we've got a short-term bounce. Are you seeing the same kind of volatility on the rebounds, on the retracement rallies in the Nasdaq and the Russell that we saw on the pullback? I mean, or no? Or is it going to be the volatility to the upside is going to be in the larger caps?
No, I think that the Russell and the Nasdaq are probably the two indexes that are most vulnerable.
No, I meant like if we find a low, let's say that we hit a low tomorrow, right?
Okay, yeah.
And we get a little bit of a pullback rally, a little bounce off this thing. Are you thinking that we're going to be seeing more volatility to the upside in, say, the Dow, the S&P, than we would in the Nasdaq or, say, the Russell? Because they've been more volatile down with the Nasdaq and the Russell than Dow and the S&P.
Right.
You see what I'm saying?
I do. And I think that because you have so many Nasdaq components that are beaten down, market leaders that are beaten down, just think about it. Google is down a ton. Amazon, which is one I talked about on your show just a week ago to short. I mean, this thing went from 380 down to 330 this morning. That's a 50-point decline. Mm-hmm. So, I mean, we have some stocks that have just been annihilated. Priceline is another one that, has gone from basically at the start of the month, it was trading at 1366. It's at 1182. I mean, so these things have been annihilated. So you'll get good snapback rallies. You're gonna see good snapback rallies, but ultimately, depending on the pattern, the volatility will really pick up on the next leg down.
I get you on that. I'm just trying to figure out where the volatility will be on the retrace rallies.
Yeah, I mean, you probably will get it in the Nasdaq and the Russell more so because when you think about the S&P and the Dow, they're just blue chip companies. So you get a lot. The people that invest in the Dow Jones Industrial Average and the S&P, they're more conservative. They're looking to collect their dividend every quarter, every so often. They're not looking to move markets. So I always think the volatility on the upside and downside is going to be in the Nasdaq and the Russell.
That's what I wanted to know. Okay, great. Valero, you wanted to talk about Valero.
I want to talk a little bit about Valero today because these oil refinery stocks, they were really holding up well, and I still think they're a pretty strong group overall. But Valero is starting to come in here a little bit. So this stock I'm going to watch around $49. I think that's where it probably finds some short-term support. But depending on the pattern, if it breaks through there, it could have a lot more downside. But right now, I just want to alert traders. I've gotten a few emails from some people that listen to your show, and I put Valero in there and just update them. That 49 is my near-term target on the downside.
Okay, got it. Perfect. All right. Now let's just we got about a minute left before we go. S&P, any numbers, any time frames on your windows?
I mean, right now I'm looking at the S&P 500 cash. I think we're going to go down and test the 1800 level, possibly even a little bit lower than that before it's all said and done. But the S&P remains above the 50-day moving average. Meanwhile, you have the Russell 2000, as we talked about earlier, below the 50-day, and you have the Nasdaq Composite also below the 50-day. So right now, once the S&P gets there, things can start to get ugly. But right now, I'm just looking for 1800 as first target.
All right, perfect. All right, contact info before we run off.
Yeah, come on over to inthemoneystocks.com. You can take out a 7-day free trial to our research center or to our intraday stock chat. And this Saturday, Michael, I will be teaching myself the In the Money Stocks methodology. So I will be conducting that webinar myself. It's about a 7-hour event. So it starts at 10 a.m. East Coast time, and it will probably end around 5:30 p.m. So if anybody's interested in that, that will be this coming Saturday.
Perfect. Thanks, Nick. We'll see you next week.
Thank you, Michael. Have a great day.
You too. Nick Santiago, President, CEO, InTheMoneyStocks.com. On the other side of this break,